Good afternoon, everyone. This is Christy with Ahn Co. It's Thursday, December 19th. I'm going to go over the markets with you for the day. So a little bit of lower trend here into the grain markets, except for Minneapolis wheat. Corn market really tried to fight onto the positive side, but ended up closing down a ½ cent on the day. A lot of that just due to the fact that we got EPA out here said that they're going to roll with the same amount for blending requirements and waiver requirements. They're going to use a 3-year average as far as that goes. That was a bit disappointing to this market, especially since President Trump was really pushing for some sort of reform to that situation, and we didn't see it. And so that kind of caught the market off guard, got a little bit of sellback, but there's a lot of conflicting reports here that are lifting these markets higher. For example, there's been a lot of talk about the fact that Brazil is going to struggle to export a lot of corn moving forward. So their exports have dropped about 15% this year, and you're also looking at them using double the amount of corn in-house for ethanol production in Brazil. And so that is going to be helpful for us, hopefully, especially in the first quarter. You also have to think about the fact that Ukraine has been so aggressive at exporting corn. They're in the same growing season as us. And so that will eventually get to a point where they need to increase their price because they're going to start to dwindle their stockpile. So hopefully that will help the corn market. U.S. Treasury came out and said that this is a done deal with China. It is papered, it is translated, it is done. There is no changing it, and they hope to sign it in the beginning of January. And so that was friendly to this market as well, but really still no hard set of information about what they want to buy. He did note that he does believe that the U.S. will that China will buy double the U.S. ag products this year for phase 1, but still that's kind of an unknown number. Are you talking about past years on normal growing situations, or are you talking about the past year where they've had decreased exports or imports from the U.S. because of the trade war? So there's still some unknowns out there, and because of that, the market just really lacking to grab onto something. Soybeans down 4 cents on the day, Chicago wheat down over 3 cents, Minneapolis wheat up over 2 cents, and then KC wheat just down over 1 cent. When you look at the meat markets here, really struggled to get anything going. It's been a quiet week, so we saw live cattle front months down, deferred contracts slightly higher, but nothing to really write home about. Feeder cattle slightly higher, lean hogs up $1 on your front month, deferred contracts not quite that high. Outside markets fluctuated here, but crude oil for the most part a little bit higher. U.S. dollar about steady, and down market a little bit higher as well. I do have to close with the disclaimer: trading in futures and option involves risk loss and is not suitable for all producers. This is a solicitation. Have a great day.